Welcome to the daily briefing from interest.co.nz. I'm David Chaston. Today we review the September Commodity Price Index, we update what is happening with the listed finance company share prices, take a look at the trading activity in the Kiwi dollar, and we'll wrap up with what the other media are reporting. For the first time in 4 months, dairy prices didn't top the monthly rises in commodity prices. This month, tanning took the top spot, with the world price of skins and pelts recording the largest rise across the commodity basket, up 17%. Overall, increases moderated, but prices are still at historically high levels. Lamb and seafood prices recorded rises of between 1 and 2%. Kiwi fruit, wood pulp, venison, wool and dairy recorded rises below 1%. At the other end of the scale, apples recorded a 12% fall as this season's exports to the European market concludes. This was followed by price declines for aluminium and beef of 4.9 and 2.2%. Timber and logs recorded price declines of between 1 and 2%. It's been tough operating conditions for the whole non-bank deposit-taking industry for much of 2007. But it's not all bad. Even though many are struggling to attract new funds and reinvestment rates are lower than they would want them to be, most are in an improving position in that they can be very selective about what lending they do. This change in the market should improve both their earnings and the quality of their balance sheets. And the companies best positioned to benefit from these changes are the listed finance companies. However, that sentiment is not currently reflected in their stock prices. In fact, the stock market has been lowering the value of these companies in a fairly aggressive manner. Perhaps there are some good buys out there for some savvy investors. Of course, the benefits from the improved lending environment have to be delivered in their reported results and on a consistent basis. Today, the trading volumes in the New Zealand dollar are huge, and those volumes have grown enormously in the past 5 years. In 2001, this trade averaged $500 million per day. In 2006, the daily trade had grown to over $5 billion. And some of those trades are absolutely enormous. In one day in January 2006, the trade amounted to $9 billion. By way of comparison, our exports for the year to June 2007 were a bit over $33 billion. Yes, $33 billion per year, or about the equivalent of a week's trading on the foreign currency markets. Dr. Neville Bennett has produced a fascinating read on this whole subject. You can link to it from the News tab in the drop-down menus on this website. And finally today, a quick wrap-up of some other recent news. Another finance company, the 10th, has been placed in receivership by its trustee. This time it is Auckland-based Clegg & Co., a very small institution. Related party lending arrangements are reportedly the ones that have tipped it over. Yesterday we noted that the PINS reporting to the NZX was late. Today's update is that their annual report has now been filed, but the PINS product is under stress and they will skip the interest payment due about now. The Auckland property market is in the grip of a slowdown. Properties aren't selling and prices are not rising, so the housing market is going through a period of considerable adjustment. It may last quite a while yet. You can get more news and start with Newsmaker Views on our news page. Join us again on Monday for the freshest finance news on the web. We'll see you then.